Before we get started, we wanted to thank Liberty Mutual Surety for sponsoring this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining me for this episode of Let's Get Surety. I've got with me today my co-host, Mark McCallum, CEO of NASBP. Hey, Mark.
Hi, Kat. We're back together again. I love it.
Together again.
Yep.
Can't break us up. And today we have a very exciting guest and an awesome topic to talk about.
We do.
We're going to be talking about the Tiger Trust Award. And to talk about that with us today, we have Kevin Garrity. He's Vice President of Surety and Construction Services at NFP in Albany, New York. Hey, Kevin. Thanks for being on.
Thank you. Happy to be here.
We are thrilled to have you. Well, before we talk more about the Tiger Trust and why you're here with us today to discuss that, I would love to hear a little bit about you and about NFP.
I'm a 40-year plus surety professional, started on the company side, then went to work on the agency side with a local firm by the name of Rose & Kiernan. We were an ESOP. I had a wonderful career there, and about 4.5 years ago, NFP came and purchased us. Great guys at NFP, a national surety operation led by really experienced folks. I'm real excited to be there, and I look forward to the future. Albeit we were just purchased by Aon again, so we're going to have a whole new experience. But it's still a good group of people, and that's what this business is all about.
That's terrific. How did you get started out in the surety space?
Oh, like everybody else, purely by accident. I was looking for a job and I had an uncle that was actually in the surety business. I was in the life insurance business and knew I wasn't going to like to do that. And as they were training me for property and casualty insurance, there was a section on surety. And I said, that sounds interesting. And I started turning over rocks to try to find out how to get into the industry. And here I am.
Nice. That's terrific. And you've just been doing it a short 40 years, right?
Yes.
Yeah. Well, before we talk more about the Tiger Trust Award, Mark, can you just tell us a little bit about what the Tiger Trust is?
Yes. So the Tiger Trust has been around for, I think, a couple decades or more now. It is one of the most significant honors I think we bestow on a surety professional. And it's really for situations where somebody needs to be convinced, maybe in the public or private sector, that a surety bond is the right way to protect their project. Mm. And so you have a surety professional who sees an opportunity and makes that pitch and is able to convince where they otherwise wouldn't require a surety bond to do so. And, it's a really important thing for the industry. And we want to recognize that work by the surety professionals who do that. That's terrific. It's individuals that are going out and helping to try and make this industry less of a best secret. Yeah, we don't want to be kept a secret. It's a wonderful product. Yeah. And people who go out there and do the extra work and go the extra mile deserve to be recognized for that. Well, we are thrilled to have Kevin with us today because Kevin's the most recent winner of the Tiger Trust Award. Congratulations, Kevin.
Thank you.
And I know you've gotten your Tiger Trust Award. It's an exciting honor. As Mark was saying, it's one of the most prestigious awards given in the surety industry. So congratulations again.
Very good.
So, Kevin, can you tell us a little bit about the project that got you to this point? Who did you convince that surety was the product for that?
I think probably the best way to do it is to talk about the genesis of the whole process. We have been the longtime producer for a local college, and that college, like many colleges, is doing a lot of construction and a lot of building, and they've evolved how they've been doing it over the years. Producer came into my office, and this is a little different situation. We usually convince people to get a bond, and then we earn the commission on it. In this particular case, as a trusted advisor for the college, they were looking for definitions and answers on how products work. They had a large national GC that was doing the work and explained that they were going to bring subcontractors' default insurance to bear in this particular situation rather than a bond. Our client didn't understand SDI and requested some help from the producer. Producer came to me. My next stop, as it typically is at NASBP to talk to Kat and Kathy, and I was able to get, I knew that they had some pieces that were really, really helpful. I don't want to downplay anything. I just want to give comparisons as to what a product does and how it works. And the documentation and the leave behinds that NASBP has put together along with SFAA were terrifically helpful. There's a side-by-side comparison of what a bond does, what SDI does, how it all works. And then as we were in conversation, there wasn't a concern about performance. There was a concern about payment. And SDI and the way that the National GC had this set up, they're probably not going to have a problem getting their building built. But they were worried about subs getting in a dispute with the GC and then leaning on trustees to try to resolve these matters. And the CFO wanted to pull away from that and have a way to download that onto somebody else. And a surety bond, performance and payment bonds do that job, and an SDI does not.
And this was a private institution.
Private institution.
So there could be lien rights exercised in that situation, I imagine.
Correct. And that was another concern as well.
Right. Wow. So you needed, they wanted kind of a comparison or kind of a factual inquiry about the two different products. So you found some resources to do that. And then did you sit down with them and kind of contextualize it?
I did.
What was that process like?
We showed up at the administration building. We sat in the chief financial officer's office on a couch and slowly went through the process. This is what this does. This is what this does. I mean, I got as granular enough to say, hey, listen, you make this decision, you're probably going to be paying $250,000 for a bond. It is if these concerns are that big, this is your solution. And a couple of weeks went by, and we got notification that they decided to go with the bond, provided us a copy of the bond, and the rest is history.
Yeah, I imagine, so this is a private university, so having, I think all three of us have gone to college or university, and, these are typically high-profile projects, right? So they've gone out there, they've made pronouncements about what they're trying to do and when they're trying to achieve it. So kind of the owner's reputation is also on the line, I imagine, to get a project done and done right. Was that, do you think, part of the calculus that they made?
I do, and with some of the financial issues that are going on the college side at this particular point, they were adapting their curriculum. This is a science building. They're bringing in a more organized nursing program into place. They have a collaborative program with the Albany Medical Center for a transition program to medical school. So this is a revenue source for them, and they wanted to get this building built and get this thing up and running.
Now, I'm curious. So you said it was a chemistry building, so not everybody can build a chemistry building, right? So what kind of pre-qualification did the university do? And did they see the bond projects as enhancing their knowledge of who quality contractors were out there?
I wish I could say yes, but I don't think it was. They dug that deep. Their pre-qual process. I mean, this was a large, E&R top 100 contractor that has worked at several local hospitals, had several local colleges, had done some nanotechnology work. They're very sophisticated. It was an easy pre-qual in that area. There probably was a half a dozen firms in the area that could have done this particular project. What they were worried about was insulating the college, as you pointed out, in lien situations and payment situations. I think they're maintenance people, they're facilities people saying, don't worry about it. We're right here.
Yeah.
And the financial people said, not so fast. Let's make sure that we go through this and understand what we can count on and what we can't.
But I imagine even with a top 100 contractor, it doesn't hurt to have a performance guarantee on there. On their performance as well. So.
That's a hidden value in this particular case. When I talk about it, I talk about how they're a 2-for-1 kind of obligation where you have a concern over here, but you get this taken care of. Most of the time, it's the opposite. It's we want the performance. Oh, but you have payment protections.
Right.
And so this really derived from the payment side versus the performance side.
So just out of curiosity, what were some of the questions that were posed to you during the course of your kind of educating them?
Who was protected in certain circumstances?
Okay.
And I explained that, and now that I work for NFP and Aon, and we have departments that do SDI, I was not going to downplay the product. But I was going to compare the products, and as we went through it, and it came down to is the GC was misrepresenting is a too strong a word, but they were saying this protects you, and what I was able to do is to show it does a wonderful job of protecting the GC,
right,
but it does it only indirectly. Does it protect you? And we went through the payment provisions and the lien provisions and those kind of aspects of it, and that decided the day.
Right. And you're just presenting the facts of how the two products work and letting then the risk manager or the finance people for the owner then make their call. But they're making their call with knowledge and not with less information than they probably need to make a knowledgeable decision, right?
Correct. And in this particular case, probably we were very objective in as much as the only dog we had in the fight was our insured. We weren't trying to make a commission dollar off of writing a bond. We were able to sit there and be a trusted advisor and go through the facts so that they could make decisions going forward.
Right. Nice. Now, have you had other similar situations to this one? I mean, this one's being recognized, but do you recall other times in your career and maybe little different scenarios, but where that sitting down and making that educated process or contextualizing
being that trusted advisor
has really paid off?
That's the short answer is yes in different aspects. I think the whole my whole underwriting philosophy is being that trusted advisor and letting people know what the rules of the game, the how do you get from here to there and why and what. I tell people I'm not here to run your business. I'm here to tell you how to get surety. These are what the successful, the most efficient contractors do. Can you get it done otherwise? Sometimes, but best practices is usually the way you get there, and I use that philosophy with most of the conversations that I have, whether it's a small and emerging contractor or a specialty product that we provide.
And before we kind of get into the mechanics of going through the award nomination process, which I think will be very helpful to the listeners.
Yeah, definitely.
But, I wanted to also ask you, so what kind of advice would you give a younger producer who is in this situation? I mean, right now in this environment, I think there's some uncertainty. There's things, workforce issues out there. Inflation is still, high. Everybody is trying to assess the environment. So it's a good time to educate owners and other decision makers about the product and why it's so important, particularly when there's uncertainty. What advice would you give a young producer on how best to approach that?
It varies by situation by situation, but if you start with the premise that you are a trusted advisor and an expert in your field, and you're better able to field questions that come along, and you're able to posit ideas as they go through it. Again, I don't want to dictate. I want people to use their intellect and the facts that are there to make a decision. So again, I've been doing this for 40 years. This was a right place, right time, right circumstance. Whether something like this will happen again, I don't know.
Right.
But but you have to be prepared, and you have to know what's behind you. And certainly the resources that I was able to bring to bear helped in that decision.
And you said that you contacted NASBP and then were guided on where the resources were, or how did that?
I had seen them in the past. I'd actually built some of them into some presentations that I've done, and when questions get asked. But those resources were just really, really helpful. They were really well thought out. They were simple, one page chart comparison, and then there was a I don't know whether it was an SIO document, but there was a longer, really detailed explanation when the risk manager took it. She was able to do a report back to her boss and allow them to make a decision.
Right. Well, I know we certainly love to hear these stories, and I do think it's so important right now. A lot of good education is undertaken by surety professionals with owners and others. But how difficult was it for you just to go through the nomination application or process for this award?
It was very, very simple, and I mean,
nice to hear too.
Good, it was very, very simple, but I like the process though. I mean, it's not something you could just say that I got a bond on this project.
Right.
You had to get that particular owner to collaborate that, and I was happy to say that in this particular case, they were pleased to do it. It was an easy ask, and it came right back. I want to talk about our product, not about me.
Right.
And sometimes the way you got to do that is it ends up a focus on an individual, but this is all about surety bonds and getting them in place versus other products.
Well, and I think that's what makes the Tiger Trust so prestigious, is because it highlights that. It highlights that happening in our industry. And I love what you said about how, you weren't even going for a premium in this situation. You're just looking to promote the surety product and let people make informed decisions with all the options laid out.
And as a risk professional, I was trying to give a client good advice. They were depending on us for that. It's probably a 25, 30-year relationship, and we don't take that lightly. They look to us, and we want to be able to give them good facts and good information.
That too says something about the relationship focus in the surety industry. I don't think you find that kind of long-term relation. 30 years is a long time.
Yeah.
You don't find those kind of long-term relationships in most positions. It sometimes can be really transactional. But surety's a lot different.
Surety's a lot different. I mean, there's parts of it that can be transactional. We're not good at that. We
not be there as much when it's that way. Right?
I enjoy helping somebody from the start, but I tell clients I don't want to write a bond. I want to be your surety agent. Yeah. I want to write lots of them over a period of time. It's not just about writing a single obligation, because there's a lot of work to do that. So if once you do the first couple, the rest of them kind of flow a little bit better. And if we can get into a situation where we have a bond program in place and we have a relationship with this client, it bodes much better for us. And then I can turn it over to my service team, who does spectacular work. They continue to make us look good every single day. But those people that are pounding out the product and getting things in place are the ones that make us look awful good.
Yeah.
So you would encourage, so we usually towards the fall of every year, we roll out with a call for nominations for the Tiger Trust as well as some other awards. And so we hope people are watchful for that. And I think it's an electronic application, fairly simple.
I think it was actually something I filled out on a piece of paper. I don't know if it was.
You emailed it in. Yeah.
I emailed it in.
You can do either way, right?
Yeah.
So
it was actually it was just some demographic information and a little paragraph and a copy of the letter that I received from the owner, and it was done.
Right.
It was over and easy.
So it's a light lift, and if you're out there and you are convincing people to take the surety route and just talking about the benefits of the surety product, you should definitely consider applying, right?
Exactly. Yeah. Let's talk about our product, and let's get it out there and used. And I'm unabashedly a fan of our product. When I was doing government relations, I mean, we are the solution. We aren't the problem.
Yeah.
Right? But we have to explain our product, and we have to let people understand. Not be like my wife, who says when I ask her what I do, she said, "I don't know what you do, but it's awful social."
Right? Yeah.
And you're having interactions with people all the time, and that's what it's about.
Right. Well, and surety professionals should know we're not limited in the numbers of awards that we can give out in this. And I know that there are a lot of good stories out there that we don't hear about. So we really want people to consider this because, we want to reward those who are a tiger for our product and for our industry, and they deserve to get that recognition. So
Definitely.
Thank you, Kevin.
Well, happy to do it and happy to be a part of the group.
Thanks for joining this elite group of tigers, Kevin. We'll have to have you back again sometime if we can. It's been great having you on today.
Thank you, guys.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just wanted to thank Liberty Mutual Surety again for their generous support in supporting this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com.